Sound speeding.
Good morning, everyone. Welcome to the first ever Buzzington podcast hosted by ASCIGT. And today our topic will be about financial literacy. My name is Juza, and today I have with me a representative from the Bank of America, Mr. Joshua Roberts. Nice to have you here today.
Awesome. Thanks for having me. Appreciate it.
Would you mind introducing yourself a little bit to our crowd?
Absolutely. Yes. So I am Joshua Roberts. I serve as the consumer banking market leader for the Atlanta market. So all of the financial centers in and around the city of Atlanta. I have a chance to be able to support and lead my financial center leaders as well as my teammates in the branch to be able to provide amazing services for all of our clients, students, youth, and young adults in the community.
Right. Thank you very much. So I guess we can dive straight into the podcast now.
Awesome.
So I guess the very first topic, and most of our viewers would be international students. So what exactly is the banking system in America? What exactly is a bank, and how can we benefit from it?
Oh, yeah. Amazing. Thanks for asking. So the banking system in America is really set up on the idea of being able to safely put your money in a place where you can get access to it multiple different ways. So obviously the focus on being able to make deposits, withdrawals, right, make purchases while you're here, but then also safeguard your money that's there with us. If you're putting it in a savings account or in a checking account, we really want our students, our youth and young adult, our international students to really feel safe and feel like they have guidance along the way and advice. And so we really focus on what we call better money habits, which is focusing on more than just the account opening itself, but how to guard your account, how to build credit, how to understand the banking system broadly. And so we focus a lot on financial literacy and financial empowerment and engagement in our communities. And so advice and guidance is really the most important part of that. And so putting your money in a place where it's safe, be also being able to borrow right from the bank as well, to be able to build your credit while you're here in the States is also really important. And so we kind of talk about those things inside the financial center and out in the community as well.
Right. So you mentioned quite a few interesting keywords right there. So let's dive into them. So the first one would be something that's very unique to the US would probably be a savings and a checkings account. That's something that's not common around the world.
Yeah.
So how would you explain that to someone who's new to the US?
Absolutely. So a checking account is more of a place to house your everyday spending, your everyday funds, right? What you're using out there in the world to be able to live, right? I imagine going to the grocery store, going to buy gas for your car, paying your bills every single day. Those are the things that you use a checking account for normally. So your everyday purchases, everything that you're doing to be able to live life every single day, pay for books, pay for classes, pay for events at school, things of that nature. Usually your checking account is going to be utilized for that because you'll have access or connection to a debit card, right? An ability to be able to swipe the card where Visa or MasterCard is taken. And so that gives you direct access to those funds in that account that you would place in. A savings account is more focused on the emergency needs, right? Being able to put money away for what we call a rainy day here in the States. And so imagine if you had an unexpected expense, such as like, a tire blowing out on your vehicle or, an unexpected cost at school, something like that. Or if you're saving up for something important, right? Maybe you're here in the States and now you have aspirations that you would want to save up for a trip or save up to, send money back home, whatever the case may be. The savings account is there and it's away from your everyday spending, so that you can put that money away and use it when you need it.
Right. Okay. So let's dive into that a little bit more. So how should a new student here split their savings between the savings account and the checkings account?
Yeah, amazing. So obviously you want to take a look at how you are currently what your expenses are on a regular monthly basis. So we call that budgeting here in the States, right? Identifying how much you need to be able to live over the course of a month. And depending upon your income that you have coming in each month, right, you want to have at least that, and maybe a little bit of cushion inside of your checking account. Right. Everything else that you don't need access to on a regular basis, you would want to put like in your savings account. So oftentimes, depending upon the cost of the expenses, we say a rule of thumb is somewhere north of maybe 3 to 6 months of living expenses inside of your savings account. So imagine if it cost you $1,000 a month to live, right? You would want to have 6 times that inside of your savings account if you have access to that, right? But you can start anywhere along those lines. And then also I would say that, as you are making purchases throughout your month or throughout your timeline, whatever you have in excess, sometimes you can also put that in your savings account as well, because that's just extra
Right.
that you didn't use. So you have margin, what we call margin in your budget, which is over the amount that you expected to spend that month.
Right. Okay. Yes. Another point that you brought up was the debit card and a credit card.
Mm-hmm.
So what exactly is the difference for someone who's new to banking?
Absolutely. Yeah. So a debit card gives you direct access to your checking account funds. So when you swipe your card, your debit card at a store, that you're paying directly out of your account, right, directly to that store or directly to that merchant or directly to that individual. And so it gives you direct access to the money. The money comes directly out, and that cash that you've stored in your checking account is immediately debited or taken out of that checking account that you're swiping the card from. A credit card, though, is where the bank provides you a sum of money, right? Money that technically you don't have. It's lended money that's available to you. And so when you make those purchases, they all roll up to a monthly bill that you pay at the end of the month, right? And
Right.
so the cool thing about a credit card is that it's allowing you to build trust and credibility with the bank. And so that allows you to be able to not only make purchases and buy things as if you would on your debit card, but pay that back. And that's what the banking system, what we call building your credit score, right? And so it's showing in good faith that you have access to an amount of money, but also the ability to pay it back when you need to.
Right. And are these cards like tied to any specific account? Like is your debit card tied to your checkings account and your credit card tied to your savings account, or are they both tied to your checkings account?
No, so a checking account is definitely normally tied to a debit card, right? So a debit card is always going to be connected to a checking account. The credit card is a standalone account, right? A credit card is you're going to get either, potentially approved for a certain dollar amount. And then from that dollar amount, you're able to spend up to what that credit limit is and pay that back. Now, of course, in the States, when you have access to that amount of money, you don't want to go and spend all of it, right, on a regular basis. You want to kind of keep that somewhere between that 30 to 50% ish range and then pay it back and start all over. That's what we call the rule of thumb of being able to just build credit as opposed to overextending yourself and spending more than what you actually have. So it does require some discipline.
Right. Well, okay. So the next question would probably be, how can someone benefit the most from a credit card? How do you maximize your credit score?
Yeah, great question. Great question. So first, with the credit card, right, you have the security, right, of being able to, when you use a credit card, when you make a purchase on a credit card, obviously it's not your funds, right, that you're originally making that purchase with. It's the funds that the bank lended your way, right? And so naturally you have the security and that buffer in between your money, right, and the outside world. You're noticing and you're seeing things like you can make a purchase, right, using your credit card. The bank is going to pay that or provide that money to that merchant. You're going to then pay that back to the bank. But let's say, for instance, you have a fraudulent, charge or activity on the card that you didn't do. Your money is not tied up in that purchase, right? When you make that purchase, so you can still file, a ability to get that money back, right? Through those things. So that's one thing. So security is one thing. It provides a little bit of a protection in between your money and the outside world. That's how we look at it first. Secondly, again, the building credit piece, right? Like I said before, as you have access to that money, you're able to then pay that back and show payment history, which is what we really want to be able to see here in the States. Payment history every single month where you're paying, you'll have a minimum payment that you can pay back, or you can pay over the minimum payment. And so when you do over the minimum payment, it shows that you're having really good, solid credit history with the bank. Last but not least, you're able to be rewarded for your purchases. So because there is an interest rate or a charge to spend that money on that card, you have the ability to earn rewards back for some of your everyday purchases that you would make. So we have rewards-based cards, right, that are available, and most banks do as well, where you can get cash back or travel points and things of that nature to pay for things as well. So there's some perks there.
Yeah. So now we get to the part about signing up for a bank account and for the debit and credit cards, right? So as an international student, when you first come in, I guess your first priority is always to set up the bank account as soon as possible. So even for myself, like I went to the bank the next day after coming here.
Yeah.
But from what I understand, maybe that's too soon to get a credit card. So what are the requirements to getting a debit and a credit card?
Awesome. Yes. I mean, usually for any bank, right, it's going to require identification. Most of our financial centers and most banks take, foreign passports and visas, right,
Right.
and things like that to be able to establish bank accounts here in the States. And that gives you all of the access that you need. The other piece is having a US based phone number here in the US so that you can set up mobile and online banking. It's a way
Right.
that for us at Bank of America and most banks as well, really do focus on being able to provide all 24/7 access to your money and understanding where your money is going and how it's
Right.
being spent. And so the US based phone number is really important. I would also say with credit cards, right? We tend to enter and we have some student methods that we put inside of our systems, right? To be able to let our system know that you're a student and you're just starting out. And so we're able to have that credit conversation with you. And most banks will have that credit conversation with you when you're establishing your first checking account, because we do want you to try to build credit and also
Yeah.
establish yourself from an everyday purchase standpoint here in the States.
Right. So do you necessarily need like a US identification, for example, like an SSN number to set up a credit card?
Not necessarily, right? And so in some cases, we'll see that our students or youth and young adults that come into our financial centers, but also most financial institutions are able to get you started, right, with something
Right.
to kind of get you off the ground, right? And then as you show and build that history over time, and our students tend to get, social security numbers here in the States or individual tax identification numbers, you're able to then, add that in, and that even bolsters your ability to build credit.
Right. So how long does the process take to set up a bank account and get it up and running?
Really good question. So in most cases, right, again, we focus on advice and guidance, right, in our locations, and banks usually focus on that. So that conversation could last anywhere between 30 to 45 minutes on average, where we get to know a little bit more about you, what you plan to use the account for, understanding some of the things that you may need to use the account for and why you may need credit or access to credit, how much you would be depositing into the account, starting off your savings and your checking with. And so that allows us to get a better understanding of the right
Right.
products and solutions that would be better for you. And then we're able to implement those within that 30 to 45-minute time frame. But it doesn't stop there, right? Most financial institutions focus on growing a relationship. And so you'll notice that you'll have multiple appointments over the course of time
Right.
because it's a long-standing relationship that you're having or building with us. And so you start your account one day, right? We want to
Yeah.
meet you in 3 months and 6 months and try to
Yeah.
check on you and see how things are going.
Right. Okay. Thank you very much for all these insights.
Absolutely.
Yep. And I believe we can move to the next segment now.